the market. Now, a big part of what's happening in terms of the Australian share market is the currency outlook. And if we have a look at the Aussie dollar in the last year, we can see that the Aussie dollar just in the last month has seen this massive slide down. So for international investors, that Aussie dollar means that they're feeling pain on the currency side. And with the Aussie dollar forecast to slide even further, it means further pain to come. So no doubt there's a bit of international participation which is involved as well. The other side of the equation, of course, is the volatility that we have seen in Japan. And just having a look at the Japanese Nikkei 225, this is what it looks like over the last 1 year, and you can see that it's been quite a nice steep rise. In fact, since November to May, we've seen a rise of 67%. Now that was throughout 126 days, but we know when the market falls, it tends to go down the lift instead of up the stairs. And if we have a look, the last 10 sessions, we've seen a fall of 10%. Why is that important for the Australian share market? Well, the Japanese market does seem to have an impact on markets around the region. If we have a look at the Japanese market together with the Australian share market, this is what it looks like. We've got the Japanese market on top and the Australian share market in green. And if I just overlay the two, what you'll notice is that the volatility that we've seen in terms of the Japanese market, you can see that the Australian market peaked around the same time, and we've been falling ever since as well. So unfortunately, not a good day on the Aussie market. The Japanese market down 0.6% at the moment, and we saw a fall of 1.1%.
Hey Julia, it's Martin. To some extent I understand why the market's coming off. It had a good run. There's been a bit of a shift out of the high yield plays, which appeared to be a very crowded trade anyway. But isn't a lower Aussie dollar meant to be good for a lot of Australian companies? And aren't lower interest rates meant to be good for a lot of Australian companies? In other words, our outlook on earnings is actually improving, and yet the market's not reflecting that.
Absolutely, and I think just having a look at the currency impact and looking at it from a short-term view versus a medium-term view, and I think in the short term the overseas investors are playing a much larger part in terms of the Australian share market. But Martin, you're absolutely right. In the medium term, it's going to be earnings supportive for the Aussie share market. That falling Aussie dollar is good news for earnings, and eventually share price action should catch up to earnings. Having said that, the Australian market has been relatively expensive. We have a PE ratio of about 17.7 times on the Australian share market at the moment. Now that's compared to a historical average of 15.5 times. So the market has run a little bit ahead of earnings, but you're right that in the medium term that lower Aussie dollar will kick in, and that will be a positive story in terms of earnings, and that should help to support the Australian share market as well. But for the short term, that pain in terms of the currency is having an impact, and we are seeing US investors as well as Japanese investors being quite active in the market, and we're still seeing selling from those two groups.
Martin, then I suppose from that, I mean, what do you see as the major causes of this Aussie dollar weakness, or do you need to talk about other currency strength along with this?
Absolutely, it's US dollar strength and the expectation that sometime we are going to see the Federal Reserve winding back on quantitative easing, and in that the non-farm payroll numbers, which will be out on Friday night, will be important, and that will feed into expectations around quantitative easing and a timing on that wind back. But it does look like the consensus view around the globe is that the US economy will continue to strengthen, and we will see some pulling back and some unwinding of that quantitative easing. And I think that you are seeing a re-weighting of global portfolios. And unfortunately, the consensus view seems to be underweight Australian equities. Absolutely agree with Martin. The falling interest rate environment is great news for company earnings, and it looks like the earnings cycle has also turned. The last couple of years, we've really been struggling to make positive earnings growth. In fact, we've seen negative growth or anemic growth, and we'll probably see about 2% growth for FY13. But FY14, you know, we're still forecast to grow around about 6 to 7%. So a turning in that cycle will be a positive. So it will be nice to see some earnings growth on the Aussie market after a couple of years which have been pretty dismal, and that should help to support our valuations, and it should help to support the market. At the moment though, I think it is the currency impacts which is having a pretty big impact on markets around the globe, and that's been a negative for Australia, and the consensus view globally seems to be underweight Australia.
Julia, it's interesting though, isn't it? Over the last couple of weeks there's been a number of interviews that I've watched, and in fact last night was one of the head of UBS, the CEO of the Complete Bank, and they're all saying that most of their clients are sitting on anything between 25 and 30% in cash, and literally if you're holding cash in the US, in Japan, in Europe, you're likely to be getting 0 or certainly sub 1% returns. So what is it that's going to really drive that cash back into equity markets?
If we have a look at the Australian share market, eventually we will see earnings kick in, but I think the key story at the moment in terms of weighting of global portfolios is the reweighting that we are seeing towards the US market. We've seen a stronger US currency that's expected to continue to strengthen, so that's good news for overseas investors investing into the US market. I mean, that's even seen on the Australian market, where we do see a lot of exchange traded products being invested in, and it's the global exchange traded products which are doing well, the ones that track the Europe 350 index, ones that track the US stock market, whether it's the S&P 500, the Russell 2000 or the mid-cap index over in the US. So I guess Australian investors have also cottoned on to the fact that with the Aussie dollar falling, if they're invested overseas, they'll be making money from just the currency conversion and hopefully on their overseas investments as well. And for international investors, the reverse is true at the moment. So I think currency has a big part to play. And in terms of the currency markets, the US, Japan, massive quantitative easing programs are in place there, and that's having massive impacts in terms of expectations around currency. In the US, it's around the expectation that we'll start to see a winding back in terms of quantitative easing, and in Japan, I think it's just general nervousness around this experiment.